Securities offered through Cambridge Investment Research Incorporated, a broker-dealer, member FINRA, SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. Discussions in the show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions.
All right. Welcome, everyone, to the Spend Life Well show, where we apply biblical wisdom to your financial life. I'm Certified Kingdom Advisor Mark Trice. In the studio with me today for today's episode is Jesse Hamilton.
Hey, everybody. Welcome to the show. How's it going, Mark?
It's going well. It's that time of year, getting ready for the holidays and things.
Yes, it is. Getting busy with stuff.
Well, I was reading an article the other day, Jesse, about environmentally and socially responsible and governance funds, ESG for short.
Yep.
Environmental, social, and governance type funds that have become wildly popular over the last several years. And I guess it was last year sometime we did an episode of the Spend Life Well show where we talked about the dangers of ESG investing and how not all ESG funds are created equal.
Yeah, so for those of you who didn't get to listen to that, you can go back and find it in our archives. But like Mark said, that stands for environmental, social, and governance. And these funds are intended to give investors the ability to invest their money in companies that are better for the environment and better for humanity, which sounds great, right?
Right.
So that better for the earth and kinder to people and employees and
Of course,
humans.
we're supposed to be good stewards, right?
Above board on legal issues. These are great and even biblical ideas.
Yeah. Now, we break out biblically responsible funds away from ESG sometimes, but in the past, they have been grouped together.
Mm-hmm. So in that episode, we didn't have maybe the best things to say about ESG. We exposed several things as incorrect or lacking integrity in some places. And we got that from a Harvard University article. And then that Harvard study showed that ESG funds can be up to 3 times more expensive and approximately 68% or more similar to traditional indexes.
So it's like if I have the certified for organic foods, right?
Yeah.
If it's organic, even 1%,
Yeah.
then it can be labeled as organic type food. So this is the same thing. If it's just a little bit of ESG certified investments, then it's an ESG fund.
Right.
But let's charge 3 times the amount, Jesse, that most funds charge for the same thing.
Yeah, and then aside from a little bit of maybe dishonesty and high costs, we saw a trend of large companies and these huge money managers, trillion-dollar money managers, hiding behind the ESG wall to possibly fund political initiatives and that kind of thing.
No, say it isn't so.
So, yeah, like you said, Mark, we saw ESG companies push out BRI, or biblically responsible investment companies, from their professional networks because they really did not align. In fact, they were quite opposing, and so much for being inclusive, right?
Right. So as it turns out, the Securities and Exchange Commission was looking into this situation as well.
Yes.
So there have been several large fund companies lately to be fined millions of dollars for offering misleading claims when it comes to ESG investments.
Yeah, so the Spend Life Well show and the SEC are investigating the same thing, maybe at different levels, but
we don't have the ability to fine people. We just have the ability to avoid certain types of investments.
That's right.
Want to for our client. So what are the different fines, Jesse? Let's jump into that.
All right, so we're going to talk about 3 today. I think there's more, and there might be more coming out soon. But the first one was in February of this year, and we're not promoting or unpromoting any specific fund company
These are just
here, but
facts.
this is just facts from the SEC website. DWS, or DIMA, which is a huge subsidiary of Deutsche Bank, quoting directly from the SEC website here, they were ordered to pay $19 million for marketing misleading statements about ESG integrated products.
Oh, so the order found that DIMA marketed itself as a leader in ESG that adhered to specific policies for integrating ESG considerations into its investments.
Mm-hmm.
However, from August 2018 until late 2021, DIMA failed to adequately implement certain provisions of its global ESG integration policy as it had led clients and investors to believe it would.
Mm-hmm.
The order finds that DEMA also failed to adopt and manage or implement policies and procedures reasonably designed to ensure that its public statements about ESG integrated products were accurate.
Yeah. So the SEC specifically was quoted in this statement saying, investment advisors must ensure that their actions conform to their words.
So it was a big talk, and everyone was a lot of people were quickly jumping on the ESG bandwagon because that was what was politically correct.
Yeah.
And ESG, I think there's a lot of good ESG funds out there. But it's you need to make sure that you understand fully what's going into those particular investments. And that's what we found after reading the Harvard study a couple of years ago, was that not all ESG funds are cracked up with what they say they're going to do. They're just simply charging you more money for the same thing.
Yeah. And I love that comment, though. Investment advisors must ensure that their actions conform to their words. It's like, we should have some honesty here, folks.
Well, it's one of those things where all the regulations are set up for a few bad apples.
Yeah.
Because there are a few bad apples out there, and there's lots of good, honest, and financial advisors that have integrity. And it's because these people are trying, they want to participate and make money.
The other chief legal counsel of these dozens of other large funds probably read this and go, oh, shoot, what's coming for us?
Yep. And I think that the SEC is investigating a number of these other ones. So what's the second one, Jesse, that we're going to mention today?
There's another one called WisdomTree. They do a lot of ETFs and mutual funds and things. They were fined $4 million last month, which is, we'll talk about, this is pennies compared to how much money they make. But $4 million last month in October. And according to the SEC, from March of 2020 to November of 22, this company, WisdomTree, represented in this prospectus for 3 ESG ETFs, and to the board of trustees overseeing these funds, that the funds would not invest in companies in certain products or activities, including fossil fuels and tobacco.
Okay.
However, the SEC investigated, and the order found that the ESG marketed funds invested in fossil fuels and tobacco.
Including some other things like coal mining, right?
Yeah, real clean
natural
for
gas,
the earth, coal mining and transportation, natural gas, extradition and distribution of natural gas, and of course, retail tobacco.
But it's so hard, Jesse. You can't fault them for that, can you? Apparently, the SEC can.
Well,
so they weren't quite as truthful as they had hoped to be with this.
I just find this one kind of funny. You can see that I'm laughing on the video here, but they just blatantly lied. No, there's no fossil fuels or tobacco in this fund.
I think it's almost impossible to have something that's pure ESG. Now, please let us know if there's something out there that meets these criteria. But they're all, it's all on a scaled score. It's a sliding scale, Jesse.
Right.
And they may score poorly on fossil fuels, but it's like they thought about it and they need it in the portfolio anyway. And it's not that much, and so we really don't have to worry about it.
Right, and it probably performed very well.
Yeah, and this is especially in the last couple of years with energy going up so much. I think this is something important that investors need to be inform themselves about is just because it has a label stamped on it for anything. It could be ESG, it could be biblically responsible investments. You have to make sure that you understand what's in the underlying funds.
Right.
Okay? And you don't want to overpay for that. So, Jess, we got one more. Invesco.
One more it's kind of a big one. It just happened a few days ago, and that's kind of spurred the topic of this podcast.
Yeah.
But Invesco is a huge money manager.
Right.
But they were fined $17.5 million.
Ooh, that's a slap on the wrist.
Yeah. But same thing, from 2020 to 2022, the SEC found that Invesco told clients and stated in marketing materials that 70 to 94% of the parent company's assets under management were ESG integrated.
Okay.
In reality,
that's a lot. That means that 94% of their funds are actually ESG integrated. Okay.
Right. In reality, these percentages included a substantial amount of assets that were in passive ETFs and did not consider ESG factors. So this is basically the fine that comes from the Harvard study that hey, these are actually very, very close to the indexes that have no ESG integration at all. And
Well, you're not, and with it, it's an ETF. You're not actually owning the company, so
Right.
I guess does
it's
it
a
matter?
model based on an index.
Yeah,
And I guess you could build the ESG index, but this one obviously did not
and the
meet the
funny
standards.
thing is, the SEC order found that Invesco lacked any written policy defining what ESG integration was.
Right. So if you're on, a board and you're at a board meeting and you ask them, what is your policy on ESG? Why are you selling this as ESG? They say, I don't know.
So this one too, the SEC, and I quote, companies should be straightforward with their clients and investors rather than seeking to capitalize on investing trends and buzzwords. Ooh.
Another one that just
Oh,
cracks
man.
me up. Companies should be straightforward with their clients. Can we not just agree that
Should that be a given? It's but it's all perspective here, folks, right? Because those fines are pennies compared to how much money these fund companies make off
Yeah.
of us, the investors.
Right. So yeah, last year that the Deutsche Bank DWA, they had $5 billion of net income. So that's bottom line profit. So they're doing fine.
So, the reason that we wanted to bring this up, not to dissuade you from using ESG funds, that's not it at all. Just to make sure that you need to be careful before you choose to invest in these types of funds. Do
Right.
your research on what your money is being invested, the fees associated, and any motives that might be underneath that particular investment. You'd be surprised about the number of fund companies that are giving to political causes, and some I don't agree with. Does that mean I want to invest with them? Well, maybe not. I don't know.
Yeah, unfortunately, Mark, our industry is constantly pushing this boundary, and it will continue to do that forever, I think. That kind of perfect line between legal and not legal, and what benefits the clients and what benefits the company itself.
Yeah, and this struggle will never change.
No.
But we want to make sure that if you're thinking about investing in ESG funds, please give us a call. We'll help you. We've got tools available to us so we can see how that fund actually really scores on ESG scales.
Yeah, we've got a great tool where you can actually pick your values that you care about, and then it will align it next to an investment, and you can see how closely they align.
I personally want to make sure that I'm investing in areas that are honoring to God and align with my values. But folks, if you have any questions anytime, you can text us at 254-282-0495 or send us an email at info@clearvistafinancial.com. That's 254-282-0495 and info@clearvistafinancial.com. Well, Jesse, until next time, we got some food for thought here for people to chew on just a little bit.
We would love to talk to you about it. If you
And
have
we
a
would.
differing opinion, give us a call or text.
All right. Well, until next time, folks, you've been listening to the Spend Life Well Show.